Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A sixth of the bullish white soldier yesterday as the market consolidated its recent rise, but at the same time seems to be put off by the next overhead resistances. The market closed at its highest for October so far, but failed to reach up as far as the previous session's high. Overall, we're still within the breakdown from the recent cat's ears pattern formed over July to date period. In this particular instance, I've been taking the combination of the 38.2% Fibonacci line for the March 2020 to January 2021 move at 116.94 and a neckline currently at 116.83 of the August to September 2020 head and shoulders top as the break area. And it is these two resistances that the market seems to be shy of testing. Anyway, regarding the original cat's ears pattern, we have a potential target X below in the 114.5 area. The key to achieving this target will be maintaining the market itself above the break lines or lines in this case. All this comes in the shadow of last month's monthly key reversal down. Looking further at an even bigger picture, we are still nicely moving down in between the upper time, currently 117.77, and the middle time, currently 114.07 of the January to May bearish Andrews pitchfork. Now this pitchfork has run the whole of 2021's action. So far today, an attempt higher, above yesterday's high, but not the day before's. Seems the market is still fighting shy of testing the overhead resistances. I continue to note the now rapidly descending short medium moving average, currently at 117.11, that is about to enter the frame. Cable, aka sterling against the US dollar. A second bullish white soldier yesterday. A second close up over the declining short medium moving average, currently at 137.22. And a first close up over the also declining medium moving average, currently 137.99. Overall, we are still back within the broken sideways triangle formed from the late July downtrend, currently at 138.55, and the mid-July uptrend, currently at 136.62. This pullback up continues to threaten a number of targets below for the sideways triangle, namely an initial target X in the 134.90 area and a secondary target X1 in the 132.65 area. Now, we'd previously managed to achieve target X, and as you expect, the secondary target is harder to reach. So perhaps that may have been enough for that pattern. We'll see. Additionally, I have droned on interminably about the long-term whole of the 2021 double top pattern, Adam and Eve type. I thought it was becoming more obscure as time moved on and prices didn't. However, the late September to early October move down had revitalized the idea enough that I placed some potential targets for this pattern. Initial target X2 in the 133.60 area and a secondary target X3 in the 131.10 area. With this move continuing higher, this big pattern is now also under threat. Beyond the declining medium moving average, you now have the flatlining long moving average overhead at 138.50, and of course the upper trend line of the sideways triangle. I suspect it may soon be contemplating targets on the upside. Whether for the sideways triangle though, or for something else, well, that bit I'm still unsure of. So far today, a reactionary move back down, testing the medium moving average, but from above, and looking actually a bit like a bearish double. All very interesting at the moment. Euro sterling. An inverted hammer pattern yesterday. Now, inverted hammer patterns are interesting. You see, they are a two-day pattern requiring a strong bearish previous session and to be in a downtrend. Hence, what we saw yesterday is one of those. The interesting feature is that traditionally they are seen as a bullish reversal pattern, yet the data indicates that they are bearish nearly 7 out of 10 times. So it'll be interesting to see if the market this time follows tradition or the data. The reason we're having this pattern in the first place is because the market is showing some extended hesitation since last Friday, in fact, in tackling the support from the old upper channel line, currently at 84.22, of the broken May to August bear channel. This somewhat unusual support has been enough to halt the decline, well, since really we've seen since late September. Overhead, we still have the significant April low at 84.70. This seems to have capped recent actions. Overall, we still have the idea out there that the most recent pattern is a large right-angled broadening formation formed since late May. The pattern is made up topside from the flat April 2020 low at 86.69 and below by the lower channel line, currently at 83.26 of the previously mentioned bear channel. However, we have stayed away from the lower channel line for, well, quite some time now, and I suspect this pattern may soon be morphing into something else. So far today, another test lower, and so far another failure to push through the declining upper channel line, broken upper channel line I should say. US dollar against the Indian rupee. A second bearish black crow yesterday and a follow-on lower to the previous session's bearish dark cloud cover pattern type and earlier bear spike. Apart from the lesser Fibonacci level at 74.91, we had little support below until the 50% Fibonacci line of the April 2020 to February 2021 move at 74.63, or so it seemed. So it was a bit of a surprise, even perhaps a welcome one, that the sharply rising short moving average, currently 74.81, managed to halt the decline yesterday. Overall, we're still above the downtrend and trendline combination of the April 2020 to date move, currently at 74.45. which makes up actually the large April 2020 to date sideways triangle. This still gives an initial topside target in the 76.36 area and a secondary target in the 77.79 area. Obviously the secondary target will be harder to achieve. All this has made a big assumption though that the recent break higher from the sideways triangle is not a false break. Well, this assumption is being tested quite a bit now. So far today, a further test lower towards the 50% Fibonacci line at 74.63 and below the short moving average this time. However, the market seems currently uncomfortable with such a move and has reverted back up towards the rise, well, over the rising short moving average and into a possible, I don't know, bullish harami, maybe an indecisive spinning top. We'll see. US dollar against the Brazilian real. A third bullish white soldier yesterday and a possible hanging man pattern after the previous session's bullish opening white Maribosa and earlier immediate countering bullish piercing line pattern type. What we've seen over the last few days is that the market is not happy about two things. Firstly, about moving lower to test the middle time, currently at 543.39 of the recent late July to late August bullish shift pitchfork. And this bullish shift pitchfork is running the current bullish incentive. Secondly, it is not happier with a possible bearish belt hold pattern that was created last Friday. Now the question is, will the market be happy about testing the upper time above of the same bullish shift pitchfork, currently at 562.72, in which we're approaching? Thus, please continue keeping an eye on this bullish shift pitchfork as it has performed so well, especially in the middle time. This pitchfork is the indicator of the gentle bullish incentive that has been evident here since the end of August. US dollar against the Mexican peso. A second bearish black crow yesterday, but not as big a one as we've seen in recent days. The reason is hardly surprising, as the market has dropped down far enough now to test the seemingly heavy support of the combination of the upper trend line of the recent broken descending triangle, currently at 20.1783, plus a mess of moving averages. Well, to start with, the gently rising short medium moving average, currently at 20.1882, the slowly rising long moving average, currently 20.1622, and finally the barely rising medium moving average, currently 20.0937. So you can see there seems to be some power below current levels. This nevertheless does little to reduce the threat to the secondary target X1 in the 21.23.5 area for the June to date descending triangle pattern. Yet all this is in the shadow of last week's weekly key reversal down. So far today, a reactionary move back up. Not an overly large one, but a similar move to yesterday overall, but in the opposite direction. Look out now for the lesser Fibonacci level above at 20.3382. Maybe just that we'll have potentially some sort of bullish pattern today as well. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.